Fine, okay, well let us move on to our second guest this evening, Andrew Knott, the Chief of Savannah Petroleum. Now this company is especially focused, I think it's fair to say, because of their work with maiden production sharing contracts in southeast Niger. So a different part of the world. They've just confirmed yet another discovery. I think we're going to be hearing all about that. And Andrew has a different kind of experience. Obviously our last speaker was a geologist. This guy was a fund manager. He's got a string of famous name companies behind him, notably Man Group, GLG Partners, but now he's firmly in the helm at Savannah, so let's hear from him now.
Thank you very much. Can everyone hear all right? Is the mic okay? Okay guys, well look, thank you very much for having me to speak. For those that aren't aware, Savannah Petroleum has been listed now since 2014. We're listed on the AIM market, London Stock Exchange. We're focused around two countries, Niger and Nigeria. To cut to the chase, in terms of the business in Niger, is exploration focused. We're in a basin which is a very large opportunity. The historic finding cost in the basin is about $1 a barrel. The NPV is about $6 a barrel, and therefore, and you've got a basin which has a 75% exploration success rate. So that's a good capital appreciation business model. And most importantly is it's very straightforward, the monetization path. So from turning a discovery into cash flow, which we'll talk about in a sec. In Nigeria, we're in the process of acquiring a series of two large oil and gas fields. Both are about 500 billion cubic feet in size, with about 10% associated liquids, and an interest in a very interesting infrastructure business, which is the only business of its type in that part of the country, with a lot of growth. Yeah, so we'll talk through each business in one by one. I'm not proposing to go through every single slide that we have here. I'm really proposing just to hit the highlights and then open up the Q&A. So in Niger, Niger is the country on the top left in the initial map. You can see a blow up of the basin that we're in, which is called the Agadem Rift Basin here. The first thing to say is it's part of a very prolific system called the Central African Rift System, which are these green blobs on the maps. It's a series of Cretaceous and Tertiary age rifts. In aggregate, there's over 6 billion barrels being discovered in that system, but most importantly, everywhere there's been oil discovered in that system, full stop, is currently in production today. So it's an area where discoveries have been monetized relatively quickly. When we go into the basin that we're in, the Agadem Rift Basin, the first thing is to talk about is the scale. It's about 30,000 square kilometres. That's about 1.5 times the size of Wales. We have 50% of that basin under license through two separate production sharing contracts. One's called R1, R2, which is this area here and here, and then R3 and R4. The balance of the discoveries are held by CNPC, which is the largest oil company in the world, and they've been very successful. On the left-hand side, we talk through what's happened in the basin in the recent eras. The bottom line is there have been 129 exploration wells drilled by CNPC. They made 95 discoveries, so a 3 and 4 success rate. They proved up 1 billion barrels. They've acquired literally telephone number amounts of seismic data, 13,000 line kilometres of 2D, 13,000 square kilometres of 3D. They've drilled over 250 wells, delivered first oil within 3 years of entering the country, and that says all you really need to know about how to do business in country. They came in from a standing start in 2008. By 2011, they built a refinery and a pipeline and delivered first oil for the country. They went through what's called the relinquishment process. Then in 2 tranches, Savannah picked up first of all the R1, R2 PSC area, then the R3, R4 PSC area. Project like this, which is very large, there's a lot of data. The first thing you have to do is consolidate that data and make sure you have a good corporate understanding of it. We went through that process. It took a couple of years, to the point where we started our exploration activity in this area here at the beginning of the year. We've drilled 5 wells. They've each proven to be successful, and we can talk about them in a second. The reason why we chose here within the permit areas was really the quality of the data that we had, the proximity to the existing and the proximity to the existing large producing fields directly on trend, and also where the main infrastructure and logistics bases are in the basin. I think just to understand why we like the project or why we're attracted to it, it doesn't matter what oil and gas project you're showing. For an oil and gas field to exist, 3 or 4 things have to have happened. The first thing, the oil's got to have been made. In this basin, every single well that's ever been drilled has encountered hydrocarbons. The reason for that is you've got 2 very prolific source rocks which underlie the basin. Secondly, you need a reservoir rock, so think of like a hard sponge with holes in it, so if the oil gets in it, it can hold it in place. Again, every single well that's been drilled in the basin has found good quality reservoir rock. So those 2 main risks are not thought to be particularly material when we look at exploring in the basin. Where the main risk is, and where you can have a situation where you don't end up with a commercial oil field, is because you have a trapping issue. So the oil gets made, it migrates, it goes into a reservoir, and you need something to stop it moving any further. The way we mitigate that, or the way that we think it's relatively low risk as well, is firstly, in the main play that we target, there's 5 or 6 reservoirs to target, which are largely independent of each other, which means you get a lot of shot at the dice. Secondly, to mitigate the risk, it's all about getting good quality seismic data. For those that are technically inclined, I'm not going to go into detail. There's a cube which sort of shows how the main play type's set up, but the main takeaway is every time we drill, we don't know which of those 5 or 6 reservoirs is going to come in, to be brutally honest. But you know that statistically it's highly likely that at least one of the 5 or 6 will. Of the 100 plus discoveries that have been made in the basin, no single well has ever had oil in all 5 or 6. But your average discovery has oil in 1 or 2, and that's what we're looking for. There's a whole lot of other stuff about prospectivity and seismic lines, etc., but I realise that in the interest of time, it's better to be concise. So I think just on Niger, I think the key things to take away are, when we first came, there were 4 issues with the project. The first is, can you finance it? Well, we've managed to do that. The second is, can you actually operate in country? The next slide shows that actually it's pretty straightforward to operate in country. Everything we've done has come in ahead of budget, as you can see, whether it's drilling wells, acquiring FTG, or acquiring seismic. There's 2 real reasons for that. The first is, I think we've got good people, and we've been able to attract good people. The second is, we're not trying to be clever, we're not trying to reinvent the wheel. We're simply taking what the guy next door is doing. We're making small amends, but not big amends, and copying them. All the infrastructure and logistics networks are established in country. You've got the world's largest land drilling company in country. You've got the world's largest land seismic company in country, and they've acquired a lot of data, and that's what we're using, and that's how we're trying to progress the project. So from an operating environment perspective, so far it's been pretty straightforward. The second issue is, fine if you can operate there, but is there actually any oil? Well, I think what we've actually discovered is a really good way to talk through how we view the prospectivity. So the first thing is, we're in a rift basin. If you go to a super extreme example like the central North Sea, you've got 64 proven play types. In Agadem, you've basically got 6 play types, of which actually it's outlined here. But of those play types, nearly all of those discoveries, of the 109 discoveries in country, 103 sit in that play I talked about before. You find that then had some shallower, some deeper, but there's not been a lot of money spent on that. So when we're talking today, we're going to talk about just that main play type. But in the real world, that's nothing like what we've got to play with here. There's going to be a lot more discoveries. People are going to be making discoveries in new play types in 20 years' time. But even on that main play, when we inherited the R3 East area, on the existing data set, you could see Kunama, and you could see Bushaya pretty easily, and you would probably have been confident enough to drill it. We then acquired, so those are discoveries that I think CNPC could easily have drilled, but for whatever reason they probably didn't have enough time. The AMD discovery, which is a very large discovery for the basin and the best discovery that we've made, you really need 3D because it's a long and skinny structure, and I'm not sure we would have had the confidence to drill it without 3D seismic. Zomo is similar because Zomo is very similar to AMD, so if AMD hadn't worked, you wouldn't have drilled Zomo. But then as well, just by taking a different technical view, so the Eridal discovery, which was our 4th discovery, was actually the structure was drilled by the previous operator. They abandoned it as unsuccessful. We drilled in a different location, and it came in as the 2nd largest discovery we've made. So the point is, even on that one play type, there was stuff that was left behind that the previous operator could see. There was stuff they couldn't really see, they needed 3D seismic for, so additional data helped out. And there was stuff that if you just take a different technical view and you back the people that are doing their subsurface work that can come in. And that is something, a story which I expect is highly replicatable across the license area. And then the last and most important thing is you can discover as much oil as you want, but if you never get out of the ground, it isn't worth anything. So from a monetization perspective, that's something which we've similarly, alongside the drilling, we've made a lot of progress on this year. So we signed a deal with the Ministry of Petroleum of Niger, whereby we'll get into the refinery and we'll be able to sell probably up to 5,000 barrels a day, possibly slightly more, but if we assume 5,000 barrels a day directly into the refinery. The capex to first oil is less than $5 million. As we ramp up, we'll probably put in a pipeline. We intend to work with an infrastructure fund to enable that. But the bottom line is, compared to how we were previously looking at first oil, which is a big long trucking solution to Nigeria, to be able to get directly into the existing infrastructure has been a major upside surprise for us this year. The second thing is, you've had the pre-feasibility study completed on the export pipeline to Benin. You've had tremendous progress made on the spur line from that pipeline, which is intended to go into northern Nigeria. And most importantly, Savannah's been put on the technical committee, so we're involved in the discussions around that. So we're looking at basically early production next year, followed by export oil in 2021. We can still truck incremental barrels into Nigeria as well, but that's not the main focus just now. The main focus just now is delivering into the refinery, and it's very remunerative. So that's Niger. So high success rate, low finding costs, clear path flow to monetization. We've got 120 structures we've identified for high grading for future drilling campaigns. We expect to start drilling again in Q1. Okay, in Nigeria, just very quickly, we're in the process of acquiring interest, as I said before, in two large oil and gas fields. One's called Uko, one's called Stub Creek. Uko is the cash engine of the existing business. It's in production for gas and liquids. Stub Creek's in production for liquids only, not gas. Essentially what happens is they're selling into very long dated contracts. The first part of the contracts are satisfied by Uko, and then Stub Creek is developed and is intended to satisfy the back end of the contracts. Nearly 25,500 barrels a day of take or pay volumes. 99 million barrels of 2P, 62 million barrels of 2C. Most of that 2C is just the undeveloped Stub Creek gas, so geologically it's the same. It's just we haven't sanctioned that, but we have got clear contracts for it. 92% of the contracts that we have are now to investment grade credits, which is a major value arbitrage that we achieved as part of the ongoing acquisition process. We expect the acquisition itself to complete in this quarter. And really, I think the emphasis now has moved away from buying an undervalued cash flow set to really looking at the growth potential in the business, which wasn't really the focus when we did the original acquisition. So I think the first thing to say is that this infrastructure is the only infrastructure of its type in that part of Nigeria. The major competing source of power is diesel. Diesel's priced at $15 an MCF equivalent. We currently sell gas to customers at $3.50, so there's quite some improvement that we can offer by selling gas to industrial customers for power. On top of that, you have a massive uptick in terms of reliability. Diesel is imported in Nigeria. It is not a reliable source of power, so there's compelling both economic and practical operational reasons for why customers should be shifting. The way that works is at a $7.50, for example, price, which is where the company's been negotiating agreements. That would more than double our margin and realization. So what I'm trying to say is that we see a clear market for growth, and that those incremental contracts will be priced at a much higher, are expected to be priced at a much higher price than that which we're selling to when it goes to industrial customers. The other issue is from a power industry's perspective as well. I'd be quite hopeful that if we look at some of the customers the company used to supply but doesn't supply today, there's the potential to start to resupply them, which again would enable us to deliver quite a significant uptick in volumes. So aligned to that, there's 40 trillion cubic feet of undeveloped gas within tie-in range of the infrastructure, and the infrastructure's got significant spare capacity. So it's not just about increasing the margin on our existing gas resource, it's highly likely that we should be able to add additional resource over the process of time. There's a slide on the NPVs and all the rest of it, but I'm not really going to labour the point. I'll echo what Paul said and say everybody's cheap. I think that the key thing, or the key message about why we're specifically interesting, is you have two businesses with that are material. So the Nigerian business is 10% of the country's power supply. The Niger business is half of the main petroleum basin. And I think we've de-risked them, and they're to a point now where they've got clear that it's pretty straightforward to value what's there already. And then in the Niger business, through exploration, there should be a lot of repeatable and replicable success that we can deliver and get it into cash flows. And then in the Nigerian side of the business, you have the stable base, which over time we should be able to bolt on and add things because we have this very unique infrastructure position in country. And with that, I guess we'd open up to questions.
Thank you very much. So, questions then for Andrew. While we're thinking about that, can I just ask you, you set this company up as somebody obviously whose job it was to assess other oil players. Was there anything particular about, because I mean it seems fairly complicated here, you're sharing contracts and so on. What was the aim? Obviously you talk about monetising all these assets as quickly and efficiently as possible. What were you trying to do differently from other oil players?
Well, I don't think it's about necessarily doing things differently. The oil industry is one of the largest industries in the world. A couple of years ago it was 33% of global capex, so there's a room for a lot of people. But I think that, so in terms of the motivation for the founders of the business, so me personally, I was at a very entrepreneurial place. We sold that business, so GLG was sold to Man Group. There was quite significant cultural changes, deals ended, etc., etc. And the decision was maybe wanting to do something a little bit more longer term orientated and could see many opportunities. And so at the time when we were setting up Savannah, we looked at several ideas, several opportunities, and then the one we came at was the Central African Rift System. For those that remember, there was a very successful company at the time called Caracal, previously called Griffiths. They did essentially what we did in Niger and Chad, whereby they did a deal with to acquire relinquished assets of Exxon rather than we did it from CNPC. And then they did a couple of deals and they ultimately sold themselves for a couple of billion. And so that looked like a good business model for us, and then that motivated Niger, and then the opportunity for Nigeria came in over time. So I would describe the outlook of the management team and the board as long-term greedy, not short-term greedy, but definitely looking to add value, and everything has a price.
Okay.
Evening, Andrew.
Hi.
Not my usual jumping off point question. A different question. You did an excellent swap deal recently, and you say the 70 deal is going to be signed off this last quarter. You've mentioned previously there's lots of other deals in Nigeria. Do you actually have some sort of vision about, once the deal's been done and the money's assured, the cash flow's assured, have you got things on the go that are ready to go relatively quickly, without giving too much away, obviously?
So I think the focus in the business just now, to be absolutely clear, is around the two large assets that we have and optimizing those assets. Okay, so we could sell things, we could buy things in the case of both assets. In terms of Nigeria specifically, I think you've got to look at the opportunity set that sits around. If you have gas in that part of Nigeria, the obvious discussion to have is with Savannah, because otherwise you're going to have to replicate the infrastructure, and it's quite a prohibitive cost. It was $1 billion to put it in, so it's sort of unlikely that someone's going to voluntarily put that in when there's spare capacity sitting there. And a lot of the times the owners of that resource, in the case of a major, they may be paying a flare penalty, so it's a liability. In the case of an independent company, they were almost certainly exploring for oil, they completed the well, and it tested gas. So you're not looking at something which in the vendor's hands to them today is particularly worth much, but through a deal to monetize it, clearly it can become worth quite a significant amount. So I wouldn't expect us to be going and spending, I don't expect any significant upfront consideration. I would say resource addition deals in this part of the world are likely to be more on a profit share basis going forward. And the good thing is as well, A lot of the gas, especially as you go further north, is pretty dry, so the separation facilities you need are pretty simple, so you don't even necessarily have to use CPF capacity up. You can just spur them with very basic separation directly into the main pipeline. So the answer is we're working on stuff all the time, but don't expect us to do something which is not. I expect the next series of deals that we do will be very closely related to the existing assets that we have.
You certainly appear to be woefully underpriced at the moment. Hello, can you hear me, can you?
Yeah.
What do you see as a catalyst, the signing off of the 7E deal? What's going to move the price?
Okay, so I mean we've had quite a good run over the course of the last couple of months, but clearly I would completely echo your sentiment. So, and one thing about Savannah is the board and management team have put in just under $7 million of their own money, so it's not like we're not personally invested. So, like in terms of the main catalyst, so implementation agreement this month, followed by deal completion this quarter, the recommencement of drilling in Niger, which will be next quarter, first oil in Niger, which is sort of a continuation of the well test, which is expected to start in December. There will be, as you've hinted at, additional activity on the deal front, but I don't want to front run that, but there will clearly be additional things that we can do to optimize things. And I think really the ultimate catalyst is cash flow, right? I mean, you start delivering the cash flows that we anticipate to deliver from the business, it becomes very difficult to ignore that.
Is it the case that a certain market cap size will bring institutions in?
Pardon?
Is it the case that a certain market cap size of market cap will bring institutions in?
Well, look, I think, I mean, just now we were about 88% institutional in terms of the shareholder register, so we're already in a pretty good shape there, and we've got very long-term orientated shareholders that we've known for a long time typically and fully understand what the business plan and the business model is. But no, I think what we need to do is you deliver on the cash flows, you deliver on the drilling campaign, and everyone else will look after itself. I'm not somebody that sits looking at the share price on a daily basis. That's not the psychology.
No, I don't think we do now either. A dividend next year?
Yes.
Okay. Yeah. Thank you very much.
No problem.
Good. Well, thank you very much indeed for sharing your thoughts.